Hi everyone, before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 October-November Paper 3-3 question number 2. This is structured paper 3 which consists of 3 questions. Each of them will be of 25 marks and the total time limit for the paper is 1 hour and 30 minutes. So ideally, you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question number 2 under 30 minutes. So without any further delay, let's get started. The members of Sea Society are concerned about plastic waste in the oceans. They have therefore formed a group to go out as teams of volunteers and pick up waste from the beaches. The members pay an annual subscription which pays for the running of a minibus which takes them to and from the beaches. Sea Society also rents a small shed where items belonging to it are kept and where members are provided with refreshments on their return. Sea Society also receives grants and donations which may cover several years. Following information is available. We have been given the receipts and payments account for the year ended 31st December 2023. So this is our closing date. All of our receipts will be recorded on the debit side. All of the payments will be recorded on the credit side. So our receipts are for subscriptions and grants and donations. For the payments, we have rent, refuse bags, collar jackets, minibus expenses. Then we have our assets and liabilities as well at 1st January 2023 and at 31st December 2023. So all of these are the opening balances, all of these are the closing balances. Then members wear colored jackets while on the beach to ensure their visibility. Unless they are lost or stolen, colored jackets can be used for approximately 15 years. Therefore, their purchase is classified as capital expenditure. It means that we treat these colored jackets to be part of our non-current assets and we need to provide depreciation on them. And the depreciation basis will be for the 15 years. Then values for inclusion in the income and expenditure account for the year ended 31st December 2023 included the following. We have colored jackets. And remember that this is the amount for colored jackets to be included within our income and expenditure account. From the previous information, we know that we consider the purchase of the colored jackets to be part of capital expenditure. And for the non-current assets, whatever value we include within the income and expenditure account, which is equivalent to the statement of profit or loss, is the amount for their depreciation. So this 190 is the depreciation charge on these colored jackets for the year ended 31st December 2023. Then we have the grants and donations. So remember, previously within our receipts and payments account, we received a total of 4,100 for our grants and donations during this year. Then we have the deferred income from grants and donations. So at the opening date, we have the value of 2,700 to be a part of grants and donations. And out of the total amounts, only 5,000 is the grant and donations to be used within this year. So this will act as the income for the current year, which is why we need to include it within our income and expenditure account under the income section. Okay. Now, for the first part of this question, we need to explain why the figure for colored jackets in the receipts and payments account is different from the figure in the income and expenditure account. Okay, the figure to be included as part of the colored jackets within our income and expenditure account is 190, and we already know that this is the depreciation value for the current year. And for the amount included within our receipts and payments account, we can see the colored jackets here. Now, these are the payments made for colored jackets. It means that during the year ended 31st December 2023, we made payment of 240 for purchase of new colored jackets. So these two are completely different things. So what we can write as part of our answer is that the value included, this 240, is the cost of the colored jackets included within the receipts and payments account, and this is the amount of cash that was paid. Whereas the income and expenditure account is based on the depreciation charge or the change in valuations, which is the change in the net book value. And we can also see that the jackets have been subject to wear and tear during the year, and this has been provided for by this depreciation because previously we were told that the purchase is classified as capital expenditure and they can be used for 15 years. So the value decreases over these 15 years, and that is accounted for by this value of 190, which is to be included within the income and expenditure account as part of depreciation. Let's write it down. The cost in receipts and payments account is based on cash paid, whereas in the income and expenditure account, it is based on change in valuations. Then the jackets will have been subject to wear and tear during the year, and this has been accounted for by including the depreciation amount in our income and expenditure account. That's all for the first part. Let's move towards the second one. We now need to explain why the income from grants and donation is different in the receipts and payments account from the income and expenditure account. Okay, we've already talked about this as well. The grants and donations included within our receipts and payments account is the amount that we received during the year. And remember that not all grants and donations are to be used in the current year. They might be donations for future use as well, which is why only a certain amount which is to be used in the current year will be released to the income and expenditure account. And in this case, the amount of 5,000 relates to this particular year, which is why this should be included within the income and expenditure account. And this is in confirmation with our matching concept, which states that only the revenue or the incomes and expenditure of that period should be mentioned within our financial statements. Let's write it down. Not all grants and donations are released to income in the year in which they are received. Some are released to income over a period of years in accordance with matching concept. Okay, that's all for the second part. Let's move towards the next one. We now have to prepare the income and expenditure account for the year ended 31st December 2023. And in this case, we're talking about C Society. So we have our income and expenditure account. And this is for the year ended 31st December 2023. Remember that income and expenditure account will only have two different sections. The first one will list down all of our incomes. This is the income for the year, so it should not include any of the prepayments for the next years, and this should also include the accrual amount, which is yet to be paid. Let's write it down. So in case of income, the very first income will be our subscriptions. And remember that we have been given the subscriptions that were received during the year, but we have to make adjustment for our subscription in arrears. The opening arrears is of 300, and this means that this was a subscription for last year which was not paid yet at the date of 1st January 2023. And this is a subscription income of the last year, which should not be included as part of our current year's subscription income. So we need to subtract this amount, and the arrears at the closing date is 120. It means that 120 is the subscription income for the current year which has not been received from the members, but we still need to add it because this is income for this year. So the total subscription for the year, we start with the subscriptions amount received during the year, which is 3,200. Then we need to subtract the opening accruals or opening arrears and add the closing arrears. Now the subscriptions for the year will be 3200 minus 300 plus 120, which results in 3020. This is to be included within our income and expenditure account. So we now have our subscriptions with the amount of 3020. And in this case, we have been given the value to be included under the heading of grants and donation as well. So we do not need to make any adjustment, we just need to copy the amount, which is 5,000 in this case. Let's write it down. And those two are the only incomes that were given within our question. So we can also calculate the total. That will be 3020 plus 5000, which results in 8020. We are done with the first section of income. The second section will deal with the expenditures. So we just need to list down all of the expenditures for the year. The very first one is the depreciation of jackets, which was given. So depreciation of colored jackets. The amount we need to include was of 190. Okay. Then let's see, we have the rent paid during the year. This one is of 3,900. Let's see if we need to make any adjustments. So in this case, we do not have any adjustments for rent. So we can just include the amount of 3,900 itself. Let's write it down as part of our expenditure. So we have rent of 3,900. Then before rent, there was also refreshments, because we were told that members are provided with refreshments on their return in a small shed. Right, and we have the refreshment amount of 500 right here. Again, we need to check for any adjustments, any accruals or prepayments, and in this case we do not have any such information, so we can just include this amount of 500 as part of our expenditure on refreshments. Let's write it down. We have refreshments of 500. Okay, then we have the refuse bags. Again, we need to check for any adjustments. No such information is provided, so we can just include this 100 as part of our expenditure. Let's write it down. That will just be 100. Then colored jackets were to be treated as part of the capital expenditure, and we have already included the depreciation. Then we have our minibus expenses of 3,580. This is the amount that was paid during the year, and in this case we have minibus insurance paid in advance. So all of these are prepayments, so we need to make adjustment. We have the opening prepayment. This 200 means that it was paid in last year, but the amount was the expenditure for the current year, so it should be included while calculating the total value for the current year. And for the closing date of prepayment, we have 260. It means that 260 was paid in the current year, but it is the expenditure for the future year. So future year expenses should not be a part of the current year's expenses. That is why we need to remove it. Now the total minibus expenses, we can just start with the amount that was actually paid, which is 3,580. Then for the opening prepayment, we add 200. For the closing prepayment, we subtract 260. Now the total will be 3,580 plus 200 minus 260, which results in 3,520. This is the amount to be included within our income and expenditure account. Let's write it down. We have minibus expenses of 3,520. Okay. Then we have the minibus itself. That is part of our non-current asset, and whenever we are dealing with non-current assets within our income and expenditure account, we need to include its depreciation. So at the opening date, the value was 16,200. At the closing date, the value was 14,100. In this case, we do not have any new purchases of minibus. That would be given on the payment section, but there is no such information. So there is no new purchase of minibus, and we do not have any information regarding disposal. So the only change in this valuation is due to depreciation for the year. So depreciation on minibus is just going to be the difference between the opening valuation and the closing valuation. So depreciation on minibus is just going to be the opening value of 16,200 minus the closing value of 14,100. This results in the value of 2,100. Let's write it down. Since it is a depreciation, it will be part of our expenditure. So we have the depreciation on minibus with the value of 2,100. Okay, that is all for the expenditure. So let's calculate the total. 190 plus 3,900 plus 500 plus 100 plus 3,520 plus 2,100, which results in the value of 10,310. And in case of income and expenditure account, we do not use the terms profit or loss. We use the term surplus or deficit. Surplus is equivalent to profit and deficit is equivalent to loss. In this case, we can see that the total of our expenditure is greater than the total of our income, which means that we have to bear a loss. So that will just be deficit. The amount will be 8,020 minus 10,310, which results in 2,290. Since it is a negative amount, we already turned it as part of our deficit. That is all for the third part. Let's move towards the next one. We now need to complete the following table by calculating the following values for inclusion in the statement of financial position at 31st December 2023. State the section of the statement where each would be shown. Okay. For the first one, we have our colored jackets. We already know we need to treat it as part of our capital expenditure, which means that this is a non-current asset. So that is the section of the statement of financial position. And whenever we record non-current assets within the statement of financial position, we should record it at its net book value. So that's what we need to figure out for colored jackets. Let's take a look above. We know that the depreciation for the year is of 190. The opening valuation was of 1100, and during the year we purchased color jackets of 240. So the changes in valuation is that the valuation will increase by the new purchase and the valuation will decrease by the depreciation. So what we need to do is, in order to figure out the color jackets value at the closing date, what we do is we can start with our opening balance. We need to add the purchase cost and just subtract the depreciation charge. In this case, we do not need to make adjustment for disposal because no such information is provided. So the opening balance for the color jackets is of 1100. Purchase made during the year was given to be of 240. And we were told the depreciation is 190. This results in the value of 1150. So this is the value to be recorded within our statement of financial position. Let's write it down. So the value is 1150. Now let's talk about deferred income. So deferred income will be for our, I think, donation and grants. Yeah, right here, from grants and donations. So at the start of the year, we had the grant amount of 2,700, which had not been used till the opening date. Then during the year, we received the value of 4,100. That is the total receipts for the grants and donations during the year. So in total, we have 6,800 of grants and donations. During the year, we used the grants and donations of 5,000. So 5,000 is gone. It was transferred to the income and expenditure account now. So the remaining grants and donation will just be 6,800 minus 5,000, which is 1,800. So this is the amount to be shown as part of the deferred income from grants and donations within our statement of financial position at the closing date. Let's write it down. So we have 1,800. And remember, this is the deferred income, which means that the grants and donations will be used for the later years. We've already received the amount, but we are yet to provide the services for it. So in a way, it will act as our liability. But in this case, we do not know whether this 1,800 will be used in the next year or after 1 year. So we do not know for sure whether it will be a current or non-current liability. So we can just record both. It will either be the current or it can be non-current liabilities. That's all for the fourth part. Let's move towards the next one. We now need to advise the managing committee whether or not they should start to include the value of the inventory of refreshments and refuse bags in the financial statements. We need to justify our answer. This is a 5 marks, so we need 2 points for why we need to include it, 2 points for why we should not be including it, and a final decision. So let's start with why we should be including the inventory of refreshments and the refuse bags. If we include the inventory, we're definitely talking about closing inventory. And remember, the closing inventory will be added while calculating the profit. Because within our statement of profit or loss, we subtract the closing inventory within the cost of sales, and the cost of sales as a whole will also be subtracted in order to calculate the gross profit. So that is 2 negative, which results in a positive, which is why the closing inventory will be added to the profit. So we can say that if we include the inventory of refreshments and refuse bags for the first time, it will increase the profit and it will also increase the current assets, because the inventory will have to be recorded within our statement of financial position under the heading of current assets as well. Let's write it down. The first time this is done, it will increase profit and current assets. And since we will be recording the inventory, we need to record it every year. So for the first time it is done, it will increase profit because we do not have any opening inventory. But from the next period, we'll have both the opening inventory as well as the closing inventory. And if those amounts vary considerably, then it will even out the changes in the expenses, because it means that overall there will be no impact in the profit. Only in the first year the profit will be increasing. Later on it will even out. So there will be no impact. Let's write it down. If the amounts vary considerably from year to year, it will even out the changes in the profit. Okay, now we need 2 points for why we do not need to include it. The very first point would be because the value may not be material, because the materiality concept states that if the amount is not significant enough, it can be treated as part of the expenditure instead of writing it down as part of our inventory. That might be the case here as well. Let's write it down. The values may not be material. So it might be a very small value, and in order to record such inventory, it will be a hassle. Then again, we can divide it into the next point as well. It will take some effort and is unlikely to come to an exact value if we have low amounts of inventory for refreshments and the refuse bags. Let's write it down. It will take some effort and is unlikely to come to an exact value. Now, based on these factors, we need to make a final decision. So I would say that the managing committee should not include the value of inventory of refreshments and the refuse bags because of this point. Unless the values change considerably from year to year, the reduction in expenses will only be shown in the first year, and from the later year it will be the same as what it would be if we were to consider the inventory of refreshments and refuse bags as part of our expenses for the year. Let's write it down. The managing committee should not include the value of inventory of refreshments and refuse bags in the financial statements because unless the values change considerably from year to year, the reduction in expenses will be a one-off. It will only be a one-time thing. So overall there will be no difference in how we treat it as part of the expenditure and how we treat it as part of the inventory. So that is all for the fifth part. Let's move towards the next one. We have some additional information. Members wear colored jackets belonging to Sea Society whilst on the beaches. Every year, 4 or 5 jackets go missing and have to be replaced. In 2023, 4 new jackets were purchased. Remember, the payment made during the year of 2023 for these jackets had the value of 240. This 240 was for 4 jackets. So we can calculate the price for one jacket. For 4 jackets, the price paid was 240. So the price for one jacket will be 240 divided by 4, which results in the value of 60. Then a local pharmaceutical company with a factory on the coast nearby has made a cash donation of 400 to Sea Society every year since it started. It has now suggested that it stops making the cash donation and instead provides Sea Society with 9 new jackets each year. These would bear a large logo of the pharmaceutical company across the back. Now we need to discuss how this suggestion from the pharmaceutical company may impact Sea Society. This is a 5 marks. The first thing we can do is comparison from the cash donation. The cash donation they are providing is of $400 and now they want to donate 9 new jackets every year. We know that the cost of one jacket is 60. So for 9 jackets, the cost will be 9 times 60, which results in 540. So the first thing we can see is that 9 jackets are worth 540, which is more than the cash donation of 400. Let's write it down. 9 jackets are worth 540, which is more than the cash donation of 400. Okay, this will act as our advantage. For the second advantage, we have been told that every year 4 or 5 jackets go missing and have to be replaced. But in this case, the pharmaceutical company will be providing us with 9 new jackets every year. Since 9 is more than currently the amount that goes missing, we can say that the old jackets can be replaced instead of just replacing the missing jackets. Let's write it down. Since 9 jackets per year is more than currently go missing, the old jackets can be replaced. So we have 2 advantages. Now we need to talk about 2 disadvantages. Now the pharmaceutical company is suggesting that it stops making cash donation and then providing the jackets. If we as a club were to refuse this offer, then we might lose out on the cash donation as well. Let's write it down. If they don't accept the jackets, they may lose the cash donation anyway. That is the first disadvantage. Then the second disadvantage in this case would be to promote their logo, because the jackets that they would donate would bear a large logo of the pharmaceutical company across the back. Instead of bearing their logo, it would be better to have the society's name on the jackets. Let's write it down. It might be better to have the society's name on the jackets instead of the logo of the pharmaceutical company. And in this case, remember that it's not an advice question. This is a discuss question. So we do not need a concrete advice or a decision. We can just write how this would impact sea society. So the major impact would be that since they would be wearing the logo of the pharmaceutical company, other people might mistake the society members for employees of the business. Let's write it down. Other people might mistake society members for employees of the company. That's all for this part as well as the entire question. If you found this video useful, make sure that you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.